Hi, this is Ken Boyd with the AccountingEd.com Training Academy, and this is 4 surprising reasons to use a health savings account. So first of all, who cares? Why are HSAs so critically important? Well, the reason is that your ability to invest in a tax-deferred way, those opportunities are declining over time for a few reasons. Contribution limits on 401ks, IRAs, and Roth IRAs are not always increased each year, and they're not increased by a lot. When you take money out of a retirement plan, you have required minimum distributions. Those are distributions you must take on a set schedule to avoid penalties, and that period of time can be shortened, which means you take more money out and pay more taxes sooner. Higher income levels, fewer options. People at high levels of income are getting tax benefits phased out. And finally, big confusion about medical costs. Premiums are rising, confusion over HCA, Affordable Care Act. HSAs exist to offset some of these costs, as we'll see in a minute. So how do you qualify for an HSA? You need to have something called a high deductible health plan as your insurance plan, HDHP, which means that in exchange for lower monthly premiums, you have higher deductibles, annual deductibles, and you have higher out-of-pocket maximums each year. As you see there, for deductibles, at least $1,300 for a single person, $2,600 for a family. At least out-of-pocket maximums of $6,500 single person, $13,100 for a family. You can't have any other medical coverage. You can't have Medicare. You can't be on any other private health insurance. And finally, you can't be a dependent on someone else's tax return. So what's the purpose of an HSA? The purpose is to accumulate dollars for current and future medical expenses. It's a savings tool. You can open an account through a bank or an insurance company. And the contributions you make into the plan have annual limits, $3,000 for a single person, $6,750 for a family, an extra $1,000 annually if you're over 55 years old. And the dollars you have in the plan are not taxed each year. They are tax deferred. How about withdrawals from an HSA plan? As long as you're withdrawing dollars to pay for qualified medical expenses, your withdrawals are not taxed. IRS Publication 502 tells you what types of expenses qualify. Broadly speaking, preventative care and prescription drugs are two good examples. If you're over 65 years old, you can take money out for any purpose, whether medical or not, but you would pay ordinary income tax on the amount that's not taken out for medical care. So it is a dollar accumulation tool outside of paying for medical expenses. So really the action step for everyone is to consider your out-of-pocket medical expenses now and in the future and see if it makes sense to have a high deductible plan and put dollars into a health savings account.